Good morning. You're watching Business World Live. I'm Danie Laurel. It's 10 a.m. this Wednesday morning here in Manila. We are about half an hour into the trading day. Let's go straight to our top story. Fitch Ratings expects the Philippine economy to shrink 8% this year. This is the worst projected plunge among Southeast Asian countries. The forecast is a downward revision from Fitch's initial contraction outlook of 4%, and it's worse than the government's projection of 6.6%. Fitch says the return of stricter protocols for Metro Manila and nearby provinces in early August is the key reason for its updated outlook. It says renewed lockdown measures are seen to depress growth by much more than it had anticipated. In ASEAN, Fitch sees a contraction of 7.8% for Thailand, 6% for Singapore, 2.5% for Malaysia, and 2% for Indonesia. It expects Vietnam to grow by 2.8%. Now, for Asia Pacific, Fitch says GDP will return to positive territory in the second half. That's as lockdowns ease and external demand picks up. For the month of August, leading indicators from Bloomberg Analysis showed that the Philippines and Vietnam slipped into contraction in both manufacturing and non-manufacturing sectors. China and India, meanwhile, saw growth. Fitch expects ASEAN to recover in 2021, with the Philippine economy seen to grow by 9%. Let's take a step back and see the sea of red of our global equities. You can see on my Bloomberg terminal here the pain that U.S. markets and Wall Street had suffered all overnight. Take a look at that. The Dow Jones down by 2 3/10%. The benchmark S&P 500 down by 2 8/10%. And take a look at the NASDAQ down by 4 1/10%. What is going on here? According to several analysts, S&P 500 was falling. That's amid concern for the progress of a coronavirus vaccine in AstraZeneca PLC. So AstraZeneca has put on hold a study which was testing a COVID-19 vaccine. That's after a trial participant became ill. So that definitely dampening all of the hopes for a vaccine that was supposed to be coming online. At least rumors had it that it would be coming online before the November elections over in the United States. You can also see the main issue here was the technology shares, which had seen the biggest sell-off, investors fleeing the high flyers that fueled a historic rally. Tesla suffered the worst rout in its history. And meantime, along with all of these bulls in the equity markets, Brent crude also tumbled below $40. It was last trading at around $36 per barrel the last time I checked. That's the first time it went below $40 since June. That's a stalling consumption recovery over here in Asia, as we had reported, and even an increased supply from OPEC Plus is signaling a bleaker short-term outlook. Now, if you take a quick peek at Asia, we are extending those losses from the US. A lot of pain here. Take a look at the Topix down by 1.5%. Japan's Nikkei 225 as well. Hang Seng, China's Shenzhen Composite also suffering losses, closing in at 2%. So not a market spared here. And when we take a look at our own local boards, it's really the same story here, stumbling in this midweek open, because after having already broken upwards the 6,000 levels, finally, yet again, yesterday, we are back down to 5972.77. That's a correction of more than 1% in this Wednesday's trade. And that, as I mentioned, was after yesterday's rising optimism that the country was yet again, flattening the curve in the number of COVID-19 cases. We were up by 1 7/10% yesterday, the most in Asia for a second day, because that was the fewest cases we've seen in 8 weeks on Monday, and that capped up 4 straight days of gains. That was the highest close we saw in almost 3 weeks. What happened yesterday, according to Chris Van from AAA Equities, sellers started stepping aside, buyers started taking the market higher, and he said that we were currently up 4.3% for the week, and we may continue higher. But that, of course, seems to be dampened by the spirit offshore, and also a lot of analysts had warned that yesterday, despite that uptrend, the value turnover was very thin. So it was just around 4.6 billion pesos. Another thing to be watching out for today, Department of Health reporting 3,281 new cases yesterday. That was double from Monday's final low count. So again, all of these issues that print that we saw, which was the lowest in 8 weeks, may not actually be sustainable. Let's take a quick peek at which sectors are pulling our boards down. Everyone, I've got to say, led by financials, suffering a hefty loss of 1.6%. Properties, which were the high flyers the past 3 days, now correcting, that's down by 1.4%. No sector is spared here from the carnage that has spilled over from Wall Street. Let's see if there's some bright spots when we take a look at just specific stocks here, at least for this hump day. You can see just two stocks in the green. That's Robinson's Retail up by 0.3%. Aboitiz Equity Ventures up by 0.1%. But take a look at Yaraland, which is dragging down the property sector. That's down by 2.3%. SM Investments dragging as well, and leading the losses over from the conglomerates. That's down by 2.3%. I had mentioned financials. The pain here being brought about by Metrobank and BDO and BPI, all in the loser board. Now let's take a quick peek at whether there are even some bright spots here. Let's take a quick check at Vista Land. That's after they had reported yesterday that they are seeing an increased demand for residential developments over in the provinces. So right now they are present in 49 provinces, and they had generated half of the revenues in the past 5 years from these areas outside of Mega Manila, and they are looking to launch more projects even amid this pandemic. So in the fourth quarter, what is the rationale here? They're saying home buyers and investors are looking for homes with bigger space amid this pandemic. They said that the June sales were actually already at 70% of pre-COVID levels, and July and August are seeing even better results than June. They had already launched 2 billion pesos worth of residential projects even in the first half. So even during the pandemic, they're also rather optimistic on the leasing segment. They said that that has been growing. They see close to 80% of the floor operations in their malls having restarted operations from just 20% when it was the height of the lockdown. So, some optimism there. Vista Land had, of course, rallied yesterday. I just want to show our viewers here the 3-week chart. Take a look at that. So even in the past 3 days, that's already up by 6.7%. Nevertheless, Vista Land joining in on that sell-off, correcting downwards by 0.6%. I want to take a quick peek at our construction industry. Let's take a quick peek at IRC. This after they have now forged a $1.2 billion contract for the Makati subway. So this is an EPC contract, engineering, procurement, and construction with China Construction Second Engineering Bureau. So that will be for civil work and also mechanical, electrical, and plumbing. So hopefully that translates into the Makati subway being completed, perhaps not on time, but at least very, very soon, as they had been hoping. IRC trading flat right now at 1 peso and 16 centavos. The one that I want to focus on actually is AEV, because that is in the number one spot this morning as we open trade. And as I mentioned, it's just one of two players that is actually opening in the green. And they have announced yesterday that they are looking for more skilled workers when it comes to their construction segment. So their construction segment is called Aboitiz Construction. They said they are looking for about 1,200 skilled workers. They are looking to jumpstart work again in specific sites. So they've got Surigao, Cebu, Iligan, Davao, Sarangani, and Subic. After, of course, just like everyone else, work was disrupted by the coronavirus pandemic. So they mentioned, apart from the construction workers, they've got engineers, welders, scaffolders. They're also looking for health workers. So they're also trying to ensure the well-being of their employees. So in Aboitiz Equity right now flat, but having opened in the green. A very quick check as well on our power players here. So AEV, of course, owns one of the biggest power players here, Aboitiz Power, that's AP. Just a quick check on them. This after Fitch has said that the Philippines will be unlikely to have nuclear power by 2029. This was a big plan that a lot were hoping for. Energy Secretary Alfonso Cusi had been looking to do the regulations on that, or to hurdle those requirements. And the government has tried to revive the sector of nuclear power and increase it amid, of course, the calls to shun the use of coal. But Fitch is saying that's not likely to happen. They maintain their forecast that there will be no nuclear capacity online in the country over the coming decade. There's high capital costs involved when you talk about nuclear and a lot of safety conditions. However, Fitch is still projecting a 4.6% annual average increase in power consumption between this year and the next 10 years. So that will be driven by strong macroeconomic and the demographic growth, which of course the government is hoping to reach 100% total electrification by 2022. They are saying, and this is bad news, of course, for renewable energy players, coal will still be the dominant in the Philippines power generation mix. It might even increase the share. It is still the cheapest and most reliable option according to Fitch, and renewables have been facing lots of headwinds. They do not expect a substantial ramp up in this regard. Now, I do want to take a quick peek at our yields here. I'm just going to be taking out the IYC. This is, of course, our yields of the Philippine Treasury bonds. You can see that on my screen here. This, as the Bangko Sentral is now looking to make bond sales their main liquidity tool. So they did say they're on track to sell their maiden securities this quarter. Selling its own debt will allow them to better guide the bond yields. And they said they will also, improve the loan pricing. The bank had already said it will continue to buy the government bonds in the secondary market for as long as it is needed. Recall that there's a provision in the new pandemic bill, which is still up for the signature of President Duterte, funding for this coronavirus response, allowing the Bangko Sentral to actually buy from the Treasury the debt up to 30% of the government's average revenues, up from the current cap of 20%. So this allowing the Bangko Sentral to inject some liquidity into our treasury, and that can actually be used for a fiscal response or more money to be flowing into this pandemic response. You can see here how our yield curve is performing. The 10-year treasury hovering at around 2.8% of a return. And finally, a quick health check on our local unit, the Philippine peso. Weakening a touch there. We're at 48.611 this morning. That's weaker by 0.055 to the greenback. This we saw the peso weakening a touch in the past few days after the Bangko Sentral had said they might be buying more government debt. So this and more will be discussed in the broadcast later on with Absolute Traders' Bonner Dytoc. Let's check in on the biggest headlines we're watching in the middle of the week. Consumption of fast-moving consumer goods is shifting to accommodate a more home-based lifestyle. That's according to a report by Nielsen Holdings. The data research firm said the demand now calls for in-home branded experiences and do-it-yourself options amid the COVID-19 pandemic. Nielsen says companies should take advantage of this shift in consumer behavior and respond with affordable, accessible, and branded take-home offers. The research firm noted that consumers are reprioritizing their purchases amid income declines during the pandemic and at the same time trying to avoid exposure to the virus by going outside. Nielsen said buyers are trying to fill the gaps in entertainment and travel experiences with consumer goods. The Trade Department, meanwhile, noted a surge in the number of online sellers amid the pandemic. Registered online businesses grew 40 times in the past 5 months as people turned to the internet to seek additional income while in lockdown. Trade Secretary Mon Lopez says, quote, silver lining in the pandemic situation is the accelerated adoption of e-commerce. The government has since relayed plans to tax online transactions to boost their revenues. Officials clarified that small players will not be included in the proposed tax scheme. Speaking of tax, 2 tax collection bureaus have managed to exceed their targets for August, as according to the Finance Department. You can see on your screens here, the Bureau of Internal Revenue generated over 170 billion pesos in the month of August. That is up 45% from its revised target. The Customs Bureau also exceeded its target by more than 30%, generating almost 45 billion pesos last month. These figures, however, are lower year on year, but the Finance Department says the above target collections is still a sign of economic recovery. Finance Chief Sonny Dominguez noted other progress, such as improvement in labor numbers after the easing of lockdowns. He also noted a continued slowdown and contraction in manufacturing production, which signals rising economic activity. Economic managers have projected a deeper contraction of 5.5% for the year, with a rebound of as much as 7.5% in 2021. The private sector is asking the government to detail its 6-month strategy that's to help the country recover in the wake of the COVID-19 pandemic. The Philippine Chamber of Commerce and Industry's Vice President for NCR, Delia Jimenez, said the government must provide a comprehensive 6-month plan that thoroughly describes concrete plans, steps, and actions it will take to help the Philippines bounce back. Jimenez said the private sector is committed to join the fight to achieve a quick and solid economic recovery. At the top of their list is a request to heighten mobility that's despite the various quarantine protocols implemented around the country. The private sector is also asking for a roadmap on assisting the tourism industry and on developing nationwide digital infrastructure moving forward. Another recommendation was for the Economic Development Cluster to assist private firms that had opted to retain employees instead of implementing layoffs. The private sector also asked Congress to fast-track the passage of the Corporate Recovery and Tax Incentives for Enterprises Act, or the CREATE, to immediately provide relief to companies in the form of a 25% corporate income tax cut. We'll have more of the markets when Business World Live returns. Stay with us. You guys are back watching Business World Live. I'm Danie Laurel. Volatile is an understatement to describe what trading in the year 2020 has been like. Here to talk technicals with us in a time where valuations are very shaky, we have Bonner Dytoc, Senior Instructor and Technical Analyst at Absolute Traders and Consulting Services. Good morning, Bonner, and welcome back to the broadcast.
Morning, Danny. Thanks for having me back.
Bonner, I'm gonna open here our charts for you, but I just wanted to kick off with what's happening. Just very sentiment driven feeling here on what the markets are looking like after that breakthrough yesterday that we finally saw ourselves back above 6,000 levels. What's your general sentiment here? What will the rest of the trading week be looking like, especially after that major sell-off we saw in Wall Street?
I believe that we'll be doing some more range trading for the week. So probably I'm looking at anywhere between 5,700 to 6,000. That should be our range for the week.
Okay, why is that? Where do you get this range? Is that because you feel that the correction or the rally that we had seen towards 6,000 levels does not have legs, and we're due again for some profit taking?
Well, yes. So number one is yesterday we already saw that we were able to break above 6,000. But the problem is today we were not able to sustain it. Right now we're doing 5,948. So aside from that, we did see that the index did make a low recently of around 5,700, I believe. So this is where I'm going to get my range for the whole week. And I think there is no real uh, catalyst that we're looking for to push the market higher. So I think it's gonna be more of the same thing.
Bonner, how has the volatility been related to the number of cases? Do you see us actually keeping in step with the increasing number of cases? Like we had a major, low in March 19. We've been moving up since then, or are we completely disconnected right now to the number of cases that's going on? Especially since we've seen naman ourselves sustain, like you mentioned, 5,700, 5,800 levels despite the rising cases.
Well, I believe that we really haven't flattened the curve. As you mentioned earlier, that yesterday we had our lowest reported number of cases, but at the same time, it was said that there were around 25 testing facilities that were not able to report. So that is also missing some numbers. And I think it only kicked in with the latest report. So yeah, I think we still need to see a more convincing report that the number of cases that are coming in is much lower, and right now we don't have.
How is our volatility compared to other indices in the region, and especially when you talk about the Wall Street indices that have still, despite all of these issues, been reaching, apart from yesterday's sell-off, have been actually reaching all-time highs?
Right now, well, since we're very volatile, one thing is for sure, I do see that there are some issues that are still bucking the trend. Even if, say, today we are having a down day, there are some resilient stocks that are still green as of the moment.
Okay, Bonner, why do you think that we are so disconnected from the other markets in Asia?
Well, we have our own problem with dealing with the virus. That's one. Um, I do get to hear that there are a lot of sentiment that it's not enough. What the
Mhm.
government is doing is not enough to address the virus situation. So I think that's one thing, but I'm not trying to be political about it. But the
Mhm.
reality is it's affecting how businesses are being run. And in some ways, it's also affecting how the stock market is doing.
Do you see a return of foreign funds so far, or because we've been still seeing an exodus here, but nevertheless we've still maintained ourselves above 5,700 levels? Is that all being supported by domestic investors keeping the faith?
Well, they're trying, but I think what we're looking for will probably be coming in once what everyone's waiting for, the vaccine or the cure, whenever that's going to come in. I think then we'll only have a chance to see things normalize to where they were before we had the ECQ.
So you're not still seeing an increasing risk appetite for emerging markets in general
I don't
since
think so.
in the past few months? Okay,
No, I haven't.
still no appetite, hasn't changed. Okay, let's talk about the index just in a more precise manner. I'm just going to pull that out for you again. Give us from a technical perspective. So this is a chart since 2015. We've hit the lowest we've seen even in those past years, so the past five
Mhm.
years, and we're still trading well below, basically a lot of the moving averages, but not necessarily the 200-day moving average. Can you tell us from a technical perspective what you expect to happen, especially when it comes to the valuations? Have we hit the bottom, or are we set for a technical rebound if we take a longer term perspective here?
Okay, so what's happened here is that back in March, we already saw that our index made a low of 4,039. So from that part, we have already created what's known as the rising wedge, which looks bullish, but is actually bearish in nature because this is going to continue the previous trend, which is going down. Now, we haven't really gone down to that level 4,000 again, which is good. But I do think that we're going down slowly. So there may still be some room for the index to go down. In fact, I'm looking at a downside target of 5,100.
Okay, by the end of the year, you mean, sir?
I can't really say if it's going to be by the end of the year, but if it's not by the end of the year, I'll even put that to sometime early next year.
Okay. Sir, what happened after the second quarter earnings? Did you see more strength, technical strength there, or was it actually did that actually weaken our technicals?
I think it weakened it a bit because, well, for one, we were definitely off the lows. That was back in
Mm.
March. So people were able to buy certain issues at a very low level. But the the weak earnings sure did not help because definitely that I think contributed to our slow descent on what's happening right now. So the problem here is I believe that there are others who are also expecting that other than two quarters of negative growth, we are going to be seeing two more quarters of negative growth. So that will push us from recession now into depression.
And we're not. This is not yet priced in by the market, sir. You feel
I don't think
because
so.
you still see a downside risk. Sir, let's talk about the MACD as an indicator. It has actually crossed above the signal line. So does not that mean something positive for the markets in terms of momentum?
Yes, for the short term, this is bullish, but this is all based on the most recent momentum of our index. Now, as to how it goes on the bigger picture, that's another question. Because as of now, it's really just going sideways.
Okay, and this, sir, even as Ghost Month is almost over, is there not going to be a pickup in momentum?
Not immediately. Although we do want that after the ghost month finishes, that things will start to pick up. But we do also realize that the reality is, once that the index starts picking up, normally that would happen around fourth quarter, not necessarily in September itself. So I think we still need to give some time before things will be able to go back to where they were.
Okay, sir, let's talk about your stock picks here from a technical perspective. Dito Telecom, that has seen a major surge. That especially after now there's new reports from several outlets. They can now put towers inside military places. Sir, tell us about the technicals of Dito. After that surge, is there still room to rally?
Yes, as far as what the chart tells us, Dito, well, for one, I did mention earlier that even if we have a red peak today, there are some stocks that are quite
Mm.
resilient, and Dito is one of them. Right now at three pesos and 34 cents. What this is doing is it's still trying to complete what I think is a up and handle. So right now it's
Mhm.
still trying to finish the handle, and this, I believe, will be complete once it gets to the 390 level. And once it gets there, then I do expect that there will be an upside of around 60%.
Sir, is it not yet overbought by investors? I'll pull up the RSI.
Well, even if it's overbought, the thing with the RSI is that this only works when we're going sideways. Once
Okay.
the stock starts trending, you'll definitely see the RSI go back into overbought levels. But more importantly, I think we should be looking at how the MACD is showing the momentum and the trend. So by such time, I do expect that the MACD will be reacting positively once Dito breaks above 4 pesos.
Okay, so still some room to rally there for Dito Telecom. Finally, Sir MPI, give us your thoughts on the charts of MPI.
Okay. MPI is also bullish as far as the chart is concerned, because what I'm seeing in MPI is that this is doing an inverted head and shoulders. Well, although right now it's down a bit, still see that there is some upside as far as MPI is concerned. Um, the critical point I see here is that it should be able to also break above the 4 peso level, because once it's able to break above that, there is a 30% upside for this.
Wow, so it seems that there's a 4 peso magic level there that both Dito
Mhm.
Telecom and MPI need to break through. Thank you so much for those technical insights. That was Bonner Dytoc of Absolute Traders.
Thank you very much.
Thank you, sir. And that's a first look into the business day. Today is Wednesday, September 9, 2020. Catch us again tomorrow morning, 10 a.m. I'm Danie Laurel, and we are One News.